Trading 101, a beginner's guide to financial markets. Our complete guide for beginners is designed for those who are just getting started in trading. You're interested in online trading because it seems interesting, and you believe you have the necessary qualities to succeed. Hello everyone, and welcome to a brand new video on the channel. Today we are going to talk about Trading 101, a beginner's guide to financial markets. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. We'll provide you with all of the required tools, educational materials, and thorough research to help you get started. We want to make sure your eyes are wide open when it comes to trading so that you comprehend both the risks and opportunities associated with the financial markets. You'll avoid the mistakes and be prepared for the steep learning curve ahead. A good steep learning curve. Before you take the leap and invest your money, there are several factors to consider in trading. For example, choose which broker to choose, how much capital is required to start your account, and the technique you will employ to trade your chosen markets. How does trading work? You begin trading by creating an account with a broker and downloading a trading platform. You then deposit money, select which markets to trade, and enter the game. You're purchasing or selling a financial product, often known as a security, instrument, or asset. You can trade a currency pair like USD/JPY, a commodity like gold, a stock index like the Dow 30, or even a cryptocurrency like Bitcoin, BTC. Click Buy or Sell, depending on whether you believe the market will rise or fall. You'll go long if you believe the market price is rising and short if you believe it's declining. Your order and the cost. Your order is transmitted to the market through your broker and then filled at the best available price. The broker will charge you a fee, which is usually in the form of a spread, but can also be a commission. Spreads will fluctuate often. For example, the cost or spread of a currency pair such as EUR/USD will fluctuate. It might be 0.2 pips, 0.7 pips, or more. Why does it change? Continue reading. Factors affecting the spread. Price increases can produce swings in the spread. Increased volatility raises spreads. The level of activity among the broker's clients will have an impact. The more active, the narrower the spread. Time to trade. A more active market will attract more participants, resulting in a reduced spread. How leverage and margins work. Leverage refers to how much of the broker's money you can utilize in conjunction with your own. For example, if the leverage is 120, the broker will loan you an additional £2,000 for every £100 you deposit. Leverage multiplies both your gains and losses. Margin refers to how much money you need to have in your account to prevent a margin call. Hopefully, you will not face this problem, but it occurs when you do not have enough funds in your account to cover your open positions. How much money do I need to start trading? In theory, you may start trading without any money. A demo account provides virtual money and is an excellent method to experience a genuine market setting without financial risk. Many analysts and experienced traders would recommend this as a starting point because it is completely risk-free and offers valuable experience. You do not have to stay on the demo for long. Simply wait until you are confident enough to trade real dollars. Before you start trading for real, you should have a solid understanding of leverage and margin, and you can begin to experiment with these concepts on the demo. Who makes successful trading debuts? The most effective novice traders are those who are eager to learn and can stick to a plan. They set their egos aside and acknowledge that learning about this new sector will take time. If you don't plan, you plan to fail. Avoiding the most common blunders can help you make a successful entry into the industry. Creating a trading plan is critical. If you were establishing a new business, you would create a business plan. Similarly, trading requires you to create a plan before you begin. Trading plan. When you establish your trading plan, you can include criteria such as the times you'll trade and the proportion of your funds at risk per session and per deal. This will help you right away. Limit your losses. Keep you from overtrading. Ensure that you are not undercapitalized in relation to the trades you place. Making a plan will also reduce stress and keep emotions from influencing your trading selections. Your trading plan should include the following elements. Trade setup. This outlines how you decide on the direction, as well as the entry and exit levels. Risk management. This specifies how you will manage your risk, such as how much you will put into each transaction. Trade execution. This outlines the requirements required for you to click the buy/sell button. Understanding different trading markets. You can trade on many different financial markets. Some of the most popular are Forex, equities indices, commodities, cryptocurrencies, and individual stocks. Every market is unique and has its own peculiarities. You can either trade the underlying asset. For example, if you buy gold, you will possess it, or trade derivatives of the asset. Forex, FX. Trading is speculating on the direction that a currency pair will move. To utilize EUR/USD as an example, the euro is referred to as the base currency, while the US dollar is the term currency. If you bet on this currency pair growing, you are forecasting that the euro will be in greater demand than the dollar. Many Forex brokers also allow their clients to purchase and sell specific stocks, also known as equities, such as Microsoft, Apple, Amazon, and Google. You can trade them directly if you possess the original share or as a derivative, such as a CFD. Currently, ATFX exclusively provides share CFDs. You'll get a list of all the tradable assets accessible on your platform. The spreads will differ, and movements in an individual share can be highly volatile when compared to currency pairs. That's the end of the video. I hope you liked it. If you did, let me know by giving it a thumbs up, and do not forget to subscribe. Thanks for watching. See you next time.